So I'm going to be walking you through my TTTM strategy. In regards to my TTTM, which is basically stands for trading towards the money or trade towards the money. Regarding that style of trading, sometimes you're going to miss the ideal entry. You guys know that if I am bullish, then I like to jump in when price runs a low and then take it to a high. And if I'm bearish, I like to jump in when price runs a high and then take it to a low. But sometimes there's going to be some days where you're going to be busy, life gets in the way, you got things to do in the morning, or you got things to do when really truly should be trying to get into a trade, but there's just other things that occupy your time. And there's going to be times where you completely miss that session. So for example, myself, I might miss the whole London session, which is ideally my ideal entry time. I like to enter between that 7 and 10 in the morning. That's my ideal entry time. And so if I don't catch that entry, then most likely I'm going to miss out the rest of the London session. So I'm going to have to go ahead and jump in that NY session. But how do you get involved in a trade with the TTTM style of trading? This is what we're going to be talking about today. It doesn't matter if you are late, but your objective has still not been reached. There's always going to be an opportunity to get into that trade. So let's go ahead and jump in on this right now and break it down. So this is a Friday. The week closes. This is this line here. So we've got the new week starts and we've got Monday. And so for Monday, if I am looking to be bullish, this is ideally what I want to see. You guys have seen my videos where I'm explaining the introductory part of the TTTM program. I've given it to you guys for free. So look, go ahead and watch that video. It will help you understand this one a lot better. And I've done a whole lot of videos on intraday trading. Every single one of those would help you with this video. So once again, you guys know the deal. When price is bullish, I like to jump in from when price runs a low. So let's just bring out this whiteboard one more time. So when price is bullish, which is what I was on that day, I like to see in the Asia session, I like to see prices go sideways like this. I don't like to see price really make moves. Really and truly, I want price to accumulate orders in the session to generate liquidity on both sides. So liquidity is going to be generated up here. Liquidity is going to be generated down here. Then I want price to, don't forget, bear in mind, I'm bullish. I want to see price drop. You guys know what's going to happen when people see price drop. When price is doing all of this stuff here like this, people are going to start thinking this is breaking out of a consolidation. It's going to give them a sell signal to jump in with sells. When really and truly, all I want them to do is just to get down to my POI. Let's just say I have a POI down here. Get down to my POI and then start rallying higher. That's all I want them to do. And so this is ideally what I want to see. People are going to be looking to sell from here still, thinking this is a break and retest and whatever other scenarios they make up in their head. But what I want to see eventually is that I want to see price run these highs, get to an area of interest. It could be some relative equal highs to the left. Let's just say those some equal highs to the left like that. Then it dropped and then it consolidated. Then there's going to be money up here. You guys know there's going to be money up here. So this would be a target of mine over here. So this is if I'm bullish, and at the same time, if I'm bearish, just flip this around. I could do the whole annotation, but look guys, just flip it around. Now bringing us back to this, if I am bullish on this pair, so this is the Asia session, all of this is the Asia session, and then we get into the London session over here. I'm going to see price run the Asia session lows. We have our Asia session lows right here, our Asia session lows. I'm going to see price run the Asia session lows, take out that liquidity, but I want to see it run into something. I'm just explaining this because this is all part of the things I saw afterwards, but I'm going to explain to you now so you can see why I was confident to get into certain trades. So then let's go to the 1 hour time frame. When price is dropping, I want to see it drop into something. It needs to run liquidity, which it has done. It ran liquidity again, has run more liquidity here. This is a liquidity from the previous day, not the previous day's liquidity, but just a liquidity from the previous day, and it dropped into where our 1 hour imbalance. So let's go ahead and mark that up for you guys. This is our 1 hour imbalance right here. You can see we dropped into this level from, this is Monday Asia. In London, we dropped right down into our 1 hour imbalance. This is where I'm expecting price to get bullish. I'm expecting price to be bullish here, and price begins to run higher. Bear this in mind now. So like I said, there's going to be times when you're going to be very busy. There's going to be times when you're going to be very busy. You're going to miss trying to enter from down here. And let's just say, even if you did try to enter from down here and you jumped in at the very high, look, you would have been stopped out. This is about a 7 pip move, a 7 pip stop loss run if you jumped in from the very high. For me, that's a bit too much. So I would have been stopped out if I jumped in here. Then I would have most likely, obviously this is all hindsight, jumped in at 50%. Because like I've told you guys before, when the imbalance is this huge, let's go ahead and mark up this imbalance. It's around 10 pips or just about over that. This is about 9 pips. When the imbalance is that big, split that fair value gap in half. And then you would utilize that 50% of that line. Okay, so this is just for future. If you ever come across an inefficiency or a fair value gap that is this large, then go ahead and split it up into two. Let's go to the 5 minute time frame now. So we know what's going on here. We have the age session, you've run that sell side liquidity into our 1 hour imbalance, and now so I'm looking to target some liquidity on the top side, which is buy stops. So let's go ahead and mark up this, and this is what I would say. Look, we have equal highs over here. These are equal highs. You guys already know what goes on at equal highs. Okay, there's gonna be people looking at this as a sell signal. If they jumped in here in that London session, look, it would have perfectly worked. There's people that are out there who have made money with retail concepts, so it is what it is. That's all. You don't need to change anything. You do what you need to do. But whenever you see equal highs, this is not the be all and end all. You want to look for what price is potentially going to reach for beyond these equal highs. And so this is when you look to the left to see what kind of area could price be trying to get up into. We have a buy candle up here. We have a fair value gap in here. So from this candlestick wick to this one's here, there's no buy side offered within this range. Only a sell candle passed through here. So we're going to need that buy candle to pass through here too, to get through this range to provide even trading. So above those relative equal highs, this is ideally where you want to go. With regards to the TTTM style of trading, look what's happened so far. We have the accumulation of orders, which is what we want to see. We want to see liquidity on both sides. We have the drop to run liquidity. That's another tick. We have a drop into a POI. That's another tick. And then we started to rally higher. We have a POI at the top side as well. Points of interest, liquidity on the other side being a drawn price. You can miss all of this. As long as price has not got into its agenda yet, this is still an opportunity. So even though the opportunity might become a scalping opportunity, as long as it's not reached its agenda yet, there's still chances to get in. So then the question becomes, how would you get into this trade? And before we move on, guys, I want to let you guys know this is my birthday week. And so what I've decided to do is I decided to drop an 80% off discount for the TTTM program. I go absolutely in. You can check all the reviews, all positive reviews, all good reviews. Lives are changing. Lives are changing because of this program. So go ahead and use that discount code. It's TTTM B-Day. Anyway, guys, so now how would you get into that trade? How would you get into this trade now? So you've missed this area down here. It is what it is. It was relative equal lows and you're like, oh, I'm a bit afraid to get into this before I get stopped out. Then you've missed that. You've missed moves along the way. This is how late I was. I was so late to this trade that I ended up looking for an entry up here. But don't forget, although I was late, I wasn't late to hit the TP area. I was just late to get into the trade. So I normally like to get in around this time. But look at the time I'm looking to get in now, 2:50-ish, around that time. We're in that NY session now. Things are moving. Equity open is taking place. Everything's taking place. So one way to get into this trade is this. I've mentioned this on one of the videos I released. So basically, I released 2 of the videos for the TTTM program and put it out on YouTube so you guys can get an introductory into the program, just knowing all the fundamentals and basics of the TTTM style of trading. And in that video, I spoke to you guys about if price is bullish and is dropping into sell candles, that's an entry. Here's a sell candle right here. Price rallied above it here, and we came back into it. When price does this, when price drops into these sell candles, these are opportunities where you can look to get bullish, get into that trade and be buying. When price is dropping it into sell candles and expanding higher, this means that institutional order flow is to the upside. And if institutional order flow is to the upside, the very best point of interest, one of the best entry areas will come when price is dropping back down into a sell candle. And so what I decided to do is I decided to jump in when price dropped back down into the sell candle and then looked to target these highs. And all I really needed was from the sell candle was for price to run above this high, because why? This then became another sell candle. And it will keep on doing this until when it doesn't. And when it doesn't, normally it's gone. And there is one other thing I used to jump into this trade that gave me extra confirmation, but I've put that into the TTTM program. That gave me extra confidence, extra confirmation that I needed to be in this trade, that price was going to go to the upside. So this is where I jumped in. So I jumped in from narrowabouts, and I jumped in from narrowabouts. These lows around here, these relative equal highs, like I said, there's always going to be something that you're reaching for above these highs. My stop loss beneath this candlestick's wick, because really and truly price shouldn't trade beneath it if we're going to remain bullish. If it trades beneath it, then I might start second guessing that price is going to be running these equal highs. I'm going to be expecting price to potentially go lower. I'm going to extend this all the way to my area of interest, so nearabouts these highs. It was a very busy day, by the way, so this is why I really missed out this. And I believe this is roughly about where I think I even took it to about 65. I believe it was 65, roughly about 65. So it was a little bit beneath this, but you don't have to get to this area. You can if you want, but my main aim was to run equal highs and to take my TP within 10 pips of this high. And this happened to be my area of interest, but I believe I closed out a little bit earlier. So I'm going to go ahead and hit play. We don't want to see price run this low. Everything's already aligned up with the TTM style of trading. Everything's aligned up. And let's go ahead and hit play. We're going to go one candlestick at a time. Look at that, guys. Massive candle to the upside. Absolutely huge candle to the upside. Smashed it. Big candle. My entry, you see a no drawdown, well, practically no drawdown, and instantly to my area of interest. This is how powerful the TTTM style of trading is. You can miss the perfect entry, catch a late entry, as long as it's not hit our area of interest yet. This is all good. Let's show it to you on a 1 minute time frame. This is that 1 minute time frame. It took about how many minutes? I was probably in this trade for roughly about a few minutes and then hit TP. You're done. You're done trading after that. This is the beauty of that TTTM style of trading. This is a 1 to 5 hour trade within minutes. You're done. And it's not always going to happen within minutes. I don't want to try and tell you that this is a minutes thing. This is not about being in a trade for a few minutes. But what I am saying though is the trade is still valid even though you missed the low of the day. The TTTM style of trading is about catching these lows of the days and taking it higher. But you don't have to do it like that. You can wait for more confirmations along the way, get your confirmations, and then go ahead and jump in. You don't have to catch it from down here. You can wait. Be patient, be patient, be patient. But everything must align up. Everything must line up. If price was to run this high straight away, like from here in that London session, start running higher, then I would have left the trade alone because it didn't follow my process. It needs to follow my exact trading process. It needs to run lower first before going higher. And when it runs lower first, that's my sign. When people are using this run lower as a bearish sign to keep on selling price, imagine those who are trying to sell price off of this support and resistance zone that they probably would have potentially marked up. Imagine this. They were selling, only for them to get taken out. This here at 1.0840, 1.0858, this is only an 18 pip stop loss. You know, these folks might have had stop losses above every single one of these highs, including this, including that. Because for a retail concept trader, a 20 pip stop loss is normal. So 20 pips takes you above here. But this is why we're running that liquidity. That's where the money's at. So this is going to be the drawn price. So this is why I'll be trading towards that money. Hence why TTTM trade towards the money. All right, guys, so this is where we were looking at. This is where we were looking at. Let's go ahead and put my executions on so you guys can see what went down. So you can see this is where I entered. I entered right here. You guys can see that blue arrow that comes up. This is where I entered when price dropped down into this sell candle here. There was multiple things confirming this area here, multiple things. And then look at where I exited. Just here, around about 65. So literally just beneath this. Just beneath this, 65. This is absolutely perfect. This is the TTTM style of trading, even when you're late. You can still catch a very, very juicy move.